So you said 35% of the new leasing is happening in the flexible workspace solutions.
Yeah.
Where is the maximum demand coming in from?
So I would say global businesses still continue to be a big part of where the growth is coming from, both multinationals and GCCs.
So you guys are at 20,000 rupees a desk and there are people at 7,000 and 8,000. But India is a price conscious market, right?
We're not looking to go into tier 2 and tier 3, where who's employing everyone. It's still these global multinational businesses. Everyone's aspirational in India. They still want to come to Bombay or Bangalore finally to find work, social infrastructures, schooling, better apartments.
Today we are in conversation with Karan Virwani, who is the MD and CEO of WeWork India. We are here to talk about India's flexible workspace market, which is entering a high growth phase with WeWork positioned firmly at the forefront. I don't know if a lot of people know this, but you come from very high pedigree, the Embassy Group.
Yes.
Coming from a family that has built so much, is there a little bit of pressure?
There's definite pros and cons to it. My dad, he separated from his father and had to really build Embassy from scratch. So when I was growing up, it wasn't always like the way it is right now. I really got to see what it took to build something so large.
It's very interesting to me how you, of course, had this big platform, which is the Embassy Group, but you still chose to branch out and bring WeWork to India. How did that thought come about and why did you do that?
I've always had a bit of an entrepreneurial bug. In my last year of college is actually when I set up my first business with a partner of mine. So I spent 2 years setting that up, really understood or experienced how hard it was for startups to set up in India at that time. There was no infrastructure. We used to meet people in rented apartments or coffee day or whatever it is. That's where meetings and all of that used to happen. That led us down this path of going to New York, entering a WeWork, and once we entered, it was like basically a light bulb, life-changing moment. It was very clear to me and to all of us, my dad included, that if this was in India, this would just explode.
That's a huge dichotomy for me, like a company that has just fallen flat globally, but you bring it to India and it's thriving. Why do you think that is?
So
Hey guys, I'm happy to be a part of Zerodha's media network. Together, Zerodha and I plan to bring to you simple yet effective and impactful news and views from the best minds in the financial world. Hey guys, welcome to the Money Mindset. Now today we are in conversation with Karan Virwani, who is the MD and CEO of WeWork India. WeWork India is the largest flexible workspace operator in the country by revenues, and the key differentiator in the very competitive landscape is its premium positioning. The company recently reported their quarterly earnings. It was a solid quarter for them. They had good almost 17-18% revenue growth. But today we're here to talk about India's flexible workspace market, which is entering a high growth phase with WeWork positioned firmly at the forefront. Thank you all for being here on the Money Mindset Show. By the way, if you like what we have to offer, please subscribe. We would love to listen to your comments and your feedback as well. This show is a part of the 01 network in association with Zerodha. Zerodha and I look to bring to you credible and reliable financial information to help you make smarter financial decisions. So thank you for being here. And Karan, thank you for being here on the show.
Thank you for having me. And this is amazing. I'm super excited to be here.
I'm super excited to have you here also because your company is like newly minted on Dalal Street.
Yes.
How are you feeling about that?
Relieved was one big feeling, I think, over the last month. But now just very motivated, very engaged to, start delivering and get into a real growth phase of the company. So it's exciting, and it's a big milestone for us, for sure.
It is, absolutely. Yeah. And earnings have been good. Brokerages are belting out report after report. I mean, how is all of that feeling? Because you've been, of course, doing this business for a while now. But now you're in, now you'll have shareholders sort of going through every single line item, analyzing growth, etc. How has that been for you so far?
So I think still adjusting to it. It's only been a month and we quickly had to get our earnings out, in that short period of time. So getting familiar with, just being comfortable and also just trying to figure out how we need to communicate the business, because it is new, it's a new segment, and we want to be the leaders and show our differentiation from all of the other operators also. So the idea is to just try to figure out how we keep doing that in the best way possible, trying to take something from different companies, and bring it into what we do. But the business, has always been a very it's a rollout business, so we constantly keep having new centers, they ramp up. So for public life, I think it's quite well in tune, because there's constant growth every quarter on quarter. So we just have to kind of keep doing what we've been doing for the last 8 years, and it will show. But yeah, just adjusting into it right now, and we'll see how it plays out.
Okay, so I don't know if a lot of people know this, but you come from very high pedigree, the Embassy Group.
Yes.
And, coming from a family that has built so much, is there a little bit of pressure? I mean, was it like, oh, this is just another thing that you're doing? Or, I mean, how do you sort of navigate all of that?
I think there's definite pros and cons to it. So my dad, he separated from his father when we were quite young. So I was like five or six, and I remember that happening. They had a construction business together, and then he finally kind of separated from them, and had to really build Embassy, from scratch. So when I was growing up, it wasn't always like the way it is right now. I really got to see what it took to build something so large, and being the eldest son also, it was a lot that I absorbed of that entire journey, not seeing him or him working late, and really seeing that happen kind of in front of my eyes as I continue to grow. So I think firstly there's a lot of appreciation for what it takes to build something of this scale, and appreciation that hard work and just actually going in day out is the only way that something like that's going to happen. So I think that keeps me quite grounded in the way that I think about what the next phase, or when I think about building WeWork also is. But it comes with a lot of there's a lot of expectation also, because every day you have like someone who's already been there, done that. It's not as though what you're doing is something that hasn't been done. But yeah, I think with that there is like a path that you can follow, or like at least take from, and know that it's possible. I think that belief that it's something is possible and can be done with hard work has some impact on how I look at sort of work, and how I look at building whatever we're building. But yeah, I mean, if we do, just doing the IPO while it was appreciated, it's just sort of like, now let's move on to the next, and very quickly.
Oh, just another day of a $1 billion valuation company.
Yeah. No, I think it's definitely a big thing for the company, but I think the aspirations and all of that are, just get larger when you come from a foundation that's already so high.
Absolutely,
Yeah.
absolutely. I speak to a lot of second generation entrepreneurs,
Yeah.
and you're a very peculiar breed, because on one hand it does reek of a lot of privilege, but on the other hand there is this pressure of expectations to deliver. So that kind of becomes a little bit of a challenging situation, I'm sure.
Yeah. And yeah, and I think that so I have two other brothers. One of my younger brothers running actually the Embassy Group now, and I think he's in much more close quarters than I am with that. So it's a little bit more challenging. I think I kind of branched out a little bit from the rest of the group to build WeWork and build this platform that is kind of separate from what we have done in the past. So a lot more autonomy, and I think had a opportunity to basically put my flavor and like how I would love to build a business and run a business into it a lot more. So yeah, I think that kind of gives me a unique sense of being part of something that, part of a legacy, but also this this sort of identity and autonomy where I've built something kind of separate from that.
Okay, and I hope you continue to do, chart your own path.
Yeah.
But talking a little bit about the business, right? You're in a space, the flexible workspace solutions, industry, which is growing at a very fast pace, and you have kind of like a first mover advantage. You brought WeWork to India. Tell us a little bit about the growth opportunity that you see, not just in urban, but also in like tier two, tier three, which is picking up in a big way.
Yeah. I think we have to just, really think about where India is in relation to maybe where we want it to be or where it's going to be over the next 5 to 10 years, right? And I think we're like so early in this journey, even though we have a dream for 5 trillion, and then getting closer to maybe where China or the US is, which is a massive gap. I mean, we're at 3, 4, 5 trillion. They're at 19, 20, 25 trillion. So the gap is huge. And I think in order to get there over the next decade, there's so much entrepreneurship, so much business activity. The scale and size of our businesses also need to grow so drastically that we are playing basically as the rails to enable a lot of that business growth over the next 5 to 10 years. So by just doing, starting with a very simple idea, which was, can I provide inspiring spaces where startups and freelancers want to come to work, has evolved to firstly doing that, but also taking away this inconvenience or this friction points that businesses had in being able to set up, grow, scale fast, not have to put upfront capex in, have flexible terms when it comes to real estate, because businesses grow in a very dynamic way. Businesses have cycles, industries have different cycles. Sometimes it's up, sometimes it's down. And for a long time, real estate has always just been a very static part of how businesses grew. It was a fixed cost, on a P&L. Wasn't an enabler. It was just a place where I'd house people, for my company, and this is where everyone comes 9 to 5, and the fax comes there, and if I have to meet someone, I need to show up at that office. I think has changed drastically over the last few years. As businesses have gotten more dynamic, there's the need for this space, or spaces even to help you enable your workforce and your growth. So I think we're at that point where companies and entrepreneurs and operators are starting to realize that I should have some flexibility in my real estate. It should kind of match how my company is going to grow over the next few years. And our entire segment is really trying to basically enable that. So if you believe that India is going to have this type of expansion in entrepreneurship and business activity, I think the flexible workspace sector is going to be a big part or a big way for you to play that growth. And our opportunity is really to kind of grab on to how these businesses are evolving, try to figure out how we can provide products, services, spaces, and infrastructure services potentially post that just allow operators, companies and businesses to forget about this part of their business, partner with someone like WeWork, allow us to give you what you need when you need it, and you just focus on building your business and doing that. I think as a young entrepreneur, people spend so much time on managing their office, managing all this admin stuff and things like that, where all that focus should just be
On
in
growing,
growing and building your business. So the opportunity is massive. It's growing faster than double the rate of commercial real estate today, which in itself is growing so fast. So the penetration is getting larger. About 35-40% of all new leasing is happening in flex, right? So you can see that that acceleration is definitely happening, and large multinationals to startups to mid-sized companies, they're all adopting the model.
So you said 35% of the new leasing is happening in the flexible workspace solutions. And out of the entire demand boost that you've seen, where is the maximum demand coming in from?
So it's, the entire game it's around talent. Today, India's office market and everything that's happening is really just driven by the demographic and the talent. And the largest employers continue to be global businesses today, it started with your Fortune 100, Fortune 1000 type of businesses. Now it's GCCs that, are really hiring in India, and this could be large scale as well as mid-tier GCCs. So where companies earlier, let's say like Target or, Lowe's, etc., were setting up GCCs in India. Today, there are these global businesses that are really mid-tier businesses. So, for example, in our space, we have a company called Neuralink. They do data analytics at the back end of, mass data points. It could be like sports or whatever it is where they do some of that. They just set up a few thousand people in India. They're not going to grow to being tens of thousands like someone like Amazon, but they're going to have a small setup here in India. And so I would say global businesses still continue to be a big part of where the growth is coming from, both multinationals and GCCs. What we're slowly starting to see is this real growth of Indian corporates. Now, Indian businesses starting to scale, wanting to compete not just in India but globally as well. And I think that's going to drive MSMEs in India, and some of the large Indian businesses are going to start competing for the same talent that these global businesses have been hiring so quickly.
It's interesting, actually, the
Yeah.
surge that we've seen in GCCs in the last 1 to 2 years has been immense. I
Yeah.
mean, especially also because of what's happening with Trump's policies and with the hiring situation in tech,
Yeah.
etc. So a lot of the work is moving to GCCs now.
I think, again, just going back to the talent point, right? Like if you look at the US, you look at Europe, you look at countries like Japan, there it's the population is aging, so the young workforce that can do technology, can build all of this technology, actually is so limited compared to the scale at which these companies need it. Also, the costs obviously of living and the cost arbitrage continues to be so high. So India is like really a bright spot for talent that is going to be unmatched for maybe the next 10 20 years. Just looking at how young our demographic is, we're English speaking, we're so technology first when it comes to our ability to learn and actually build some of this, that if I'm a tech entrepreneur, let's say in Europe, I find it hard to find engineers, that I can just house in, let's say, France or something like that. So I need to come and look in India to be able to actually hire those type of
That
talent.
talent. Oh.
And India also has moved significantly in the value chain. We used to be call center, back office type of work, right? Today, all global product development for large tech businesses is happening out of India. Your high value R&D happens out of India. So a lot of things for some really large companies gets built out of here. And the surge is just that. It's because we have this talent that these companies have actually not much choice in the world on where they can hire at scale and get this high level output. So that's something that I think we'll continue to benefit of over the next few years.
Do you think that could be one of the reasons why WeWork didn't do well globally and why it's picking up in India? Because that's a huge dichotomy for me, like a company that has just fallen flat globally, but you bring it to India and it's thriving. Why do you think that is?
So I think there are a few reasons. I think India itself is, what we just spoke about,
Yeah.
this entire demand, the fact that, companies are growing so fast here, the fact that Indian real estate itself is actually quite nascent. So today, commercial real estate, grade A, which is where a lot of these companies want to be, India has roughly about 800, 900 million square foot. Manhattan has 700, 800 million square foot of grade A stock. So India's entire stock is, roughly the size of one city in the US in terms of the amount of real estate that's available. And the speed of hiring of these companies is so fast that the supply is not able to keep up with the demand. So when you have flexible spaces like us, or you have spaces like ours which have already put in the capex, we have the supply in those great
The
locations.
infrastructure.
The demand kind of has to come to us, and we're faster to move than some of these companies and all of that. So you automatically see that demand, stepping in. I think the other factor is that, we never raised any venture capital. We actually invested our own capital into this business. So I think the discipline that we had from unit economics, selecting the right assets, the type of growth that we did was fast, but it wasn't just, growth at any cost, which is what happened with WeWork a bit, when SoftBank and, some of that
So it's
investment kind of
asset
came
light,
in.
basically.
Not just asset light, it's focus growth, I mean, I think what
And low
WeWork
debt
did
also, I
in,
guess.
especially in the US, they expanded into cities that, you know, you don't see that much demand. They were just growing because you needed to show type of growth numbers. This was also at a time where the world was a bit different. There was, people were giving you value for growth at any cost, and burning capital. I think it switched a little bit when Uber went public. There was a moment in time when all that VC funding, and then someone like it, I think it was Uber and Lyft, like few of these companies went public around the same time, 2018. Just before WeWork also filed for its IPO. And there was a clear disconnection between private valuations and what public was willing to value these companies, and the understanding that just because Amazon kind of didn't make a profit for so long, that model would be okay. And at that point, WeWork was at this high pelt growth at any cost type of mode. So when that switch happened in the world, and the investor community, and then WeWork tried to go public like few months after that, it wasn't, they weren't able to, it wasn't that well received. And that's when it kind of, everything kind of fell
Apart for
apart.
them.
And but today it's in a very different place. So WeWork went through a Chapter 11, bankruptcy. They were able to get rid of all of these leases and some debt that was weighing down on the balance sheet. COVID had happened, right? In India, at least, once lockdowns were lifted, people were directly back to work. It ended up becoming a tailwind for us as an industry. But in the US, people are just now starting to come back to the office after so much push from global, CEOs, and Jamie Dimon is like,
Yeah.
is like
I think on
the
a daily basis, he's
yeah,
calling
he's
people
like
back
the
to work.
poster boy for return to office at this point in time. And that's now happening. So you're actually seeing WeWork globally pick up.
Now?
Occupancies are coming back. They've
Okay.
actually been profitable for the last 3 quarters.
Oh,
So
interesting.
it's a much more stable, run by
Business now.
yeah, like it's not looking at that growth.
Okay.
And I think this flexible demand is global. It's a global shift that's happening.
No, definitely. Especially as the gig economy is also picking up, right?
Yeah.
In a big way. I mean, the
Yeah.
traditional businesses are laying off. I was reading the numbers. The layoffs that we've seen in the US in the last 10 months of 2025 is the highest that we've seen in the last 22 years.
Yeah.
So if people are transitioning from traditional businesses to the gig economy, then of course they will use more of
Yeah.
flexible workspace solutions as well.
Yeah, it's that, and large companies, let's say like Amazon, Microsoft, or some of these global businesses, they have tens of thousands of people. I mean, Amazon in India itself has like 40,000 people, right? And I think what they're okay with, and what they're really moving to, I think it's something like 50-60% of companies are looking at this, where some portion of my workforce and my real estate portfolio I want in a flexible way. So I don't want to necessarily, for all my 40,000 employees need to sign office space that is long term, because things like this happen. I have moments of layoffs where I've extended or overextended on certain teams, but there are also moments of growth that happen. Like this hiring is much faster than what my original pace of hiring is. It could be because a new business is coming up, or I'm moving a new unit to India, whatever it might be. So what we're seeing is a transition from lots of large occupiers, large workforces today, moving some part in a much more flexible way. So if you just take Amazon saying, I'll move 10-20% of that 40,000 to a flexible model, that's automatically like 8,000, people that will that's demand for someone like us. And so that's happening at scale at a global level,
Even in India?
especially in India.
Oh, that's
Yeah.
interesting. Okay.
If you look at India, you look at other countries, it's think of them as they build out their real estate portfolio globally as like a hub and spoke model, right? So taking Amazon as just an example, hub is like Seattle or New York or whatever it is. These are my front office headquarters. But my other operations around the world are for certain business cases, use cases. India is, specifically for whatever product development and building technology and all of that. So it's not a core part of it's not where I am from. It's a new country. I would want to be as light as possible, right? And it's even more so for these GCCs, these smaller companies, these mid-tier companies who based out of Dallas or somewhere in the US or Europe. So India's still very new. I don't want to come in here and put like millions of dollars and take long
Into
term
real estate, yeah.
lease. I much rather have like a lighter model. I much grow how I kind of see it going, and if it doesn't work out, I can quickly go back to just having my space back in the US. And so that's happening at a global level, and flexible operators are a great way, great infrastructure tool to be able to support that type of growth.
So, coming back to your business, right?
Yeah.
We're talking about the opportunities over the next couple of years. You have around 8 million square feet right now
Yeah.
of operational area. And I think the average revenue per person is around 20,000 rupees. How much do you think you can scale up these two parameters over the next couple of years, just on an average?
So, we already have like 10 million square foot signed up and identified. So between where we are today at 7.5, 7.7, we already have identified up to 10 million in AUM, which is LOI signed, some are under fit out, and some are yet to be handed over. So that's already like, I think, whatever, 25-ish%, capacity growth just in the near term. We really see this as sort of like a consistent growth. So I think 20-30,000 desk additions year over year is something that we can easily do. Today, about 50% of our growth comes from our internal members itself growing. So as the base effect of our existing portfolio, the members that we have are just organically growing. Someone's business is 10 people today, they're just hiring 5 more people. All of that is happening at scale within the member base. So just to cater to that growth in the next year or two, we will have to do 20,000 desks just to cater to this organic growth. So there is some room to extend and kind of keep adding more than what we have in the past. We see this business, though, not necessarily as a linear business, in the sense that it's not just always about taking leases and adding capex to grow. There's opportunities now where through services and kind of new business lines which are adjacent to your workspace or this entire infrastructure part that we can start offering to companies, that allows us to go a bit deeper into the wallet share of businesses.
Like what?
So let's say like transport as a service, for example, companies do that for their employees. F&B, catering, that's like a pretty large additional business. We are looking at employee engagement. So when you see Workspaces, the vibe is something that people just love. The energy that we create, we do events, something that's outside of your work environment. We can highly curate that specifically for a company also. When you're trying to build culture in your organization, you're trying to make it a great place to work, you want to attract the best talent. These are the things that you need to do, which if I'm building a technology business or I specialize in financial services, I don't necessarily know how to do that,
Yeah.
or I have to hire an admin team. I have to hire people in my HR team to be able to do it versus us being able to do it. And that's something that we're seeing become much more of a priority. Employee experience is driving, how I attract the right talent. The amount companies are willing to pay on the environment that their employees work in today, the perks that they give, things like food and all of this stuff has gone, has gone crazy over the
Exponentially. In
last.
fact, I recently did an event at the WeWorks in
Yeah,
Bangalore,
yeah,
and it's very aesthetically done. It's really a premium
yeah.
experience. It's very different from the other co-working spaces, and I'm sure there's a lot of competition in this space now with the likes of, like, say, an office or say co-works, and
Yeah.
so many small mom and pop shops coming up in every nook and corner. But do you feel the heat of competition, or do you think that your offering is so premium that it really is in another league?
I would say a bit of both. Definitely, competition is heating up. We have, I think, 4 or 5 listed players now. So, the biggest, I would say, barrier to this business at scale is capital, because we have to keep deploying capex to kind of grow the business. Now, when few of these operators have access to capital, there's going to be competition. I think clear differentiations come in like any other brand that we have to continue to focus on. So quality of product, quality of the service that we offer, how innovative are we going to be from a technology standpoint, from new products, is the network effect that we create something that is hugely valuable to our members that can become an intangible over time. I think that those are the things that we are focused on, to try to separate as much from the pack. At scale, though, today, most of the other operators play the value game. So, most operators are operating at like 7,000-8,000 rupees a desk. We are at, close to 20,000, like you said. So, even at the same square footage, as the rest of the operators, or I think we have slightly less than 1 or 2 operators. Our revenues are nearly double, profitability is nearly 3 times in terms of quantum that we're making. So with that with that view, I think that it's hard for people to really come close to where we are. But generally there is competition building up. I mean, there are 500 operators in India today, leaving
The large names aside,
yeah, I mean, 500 including everyone, which includes all these mom and pop ones that you're
that's a
talking about.
lot. And also, I mean, you said you made an interesting point. So you guys are at 20,000 rupees a desk, and there are people at 7,000 and 8,000. But India is a price conscious market, right? It may not be in the 1% of India, but in Bharat, if you're looking to sort of, broaden or diversify into tier 2, tier 3, do you think this price point will hold, or will you have to bring it down?
We're actually not going off. I mean, we're not looking to go into tier 2 and tier 3. Like I was telling you, who's employing everyone? It's still these global multinational businesses, right? And they're still chasing after the top end of the talent. So they want them to be in nice places, nice locations in the cities. This talent also doesn't want to necessarily live in tier 2, tier 3 market. Everyone's aspirational in India. They still want to come to Bombay or Bangalore, finally to find work, social infrastructures, schooling, better apartments, F&B, all those things are driving people still to the top 8 metros. I think India's migration is like, 40-50% into the metros today. So almost 600 million people are going to come into the metro cities over the next few years. And it's largely driven by the fact that job opportunities and all of that continue to be within these cities. So our focus is, we want to just focus on these multinationals, top tier of Indian corporates, top tier of startups that will continue to be, in the top metro cities itself. And I think that for the quality that we put out, the type of service that we offer, we do need that price to be able to make sense. Um, and I think this is going to be the case maybe for the next 5 to 10 years, unless some city suddenly pops up and starts becoming, a huge hub. I don't think we're looking too much to expand into those cities. We just want to follow the demand, and the demand still continues to be within these top 8 cities.
It's
Someone
interesting to
like
say that because at least the feedback that I get from a lot of realtors is that tier two, tier three, maybe not tier three, but even like tier one, tier two cities are picking up a lot. Like, for example, a Chandigarh or a Surat or a Nasik or a Gandhinagar. Outside the metros, there's a lot of infrastructure development happening. A lot of companies are coming up as well. So I would assume that maybe you would.
it is. It's definitely happening. I'll just give you like a example. Chennai, right? Chennai has always been Chennai. I mean, it's tier one city. Until 2 years ago, the real estate absorption in Chennai was only about 2 million, right? Whereas let's say Bangalore does 18 million. So that's like the gap in terms of the demand that exists. Today, Chennai is at 10 million. Actually, it's grown. There's a lot of demand happening. We only entered Chennai last year, and since then we'll have 3 locations basically in a period of 12 months, and next year we'll be looking to expand a lot more. So I think we'll wait for those type of inflection points in a city. So not to say that we won't ever go to Chandigarh or to one of these cities, but we just want the demand, the amount of supply to be available so that it's easy to grow, right? We prefer to go deeper rather than saying that we'll have.
Spreading yourself too
Yeah.
thin is not.
Yeah, all the efficiencies hit when we go deeper. The operational efficiency, the network effect, the ability to, cater to these companies in multiple parts of the city. I think all those things are very, very important for us to keep high occupancies and like just keep it going.
And since you are so in tune with the commercial real estate market, you were telling me comparing it to Manhattan and how it's really very. I mean, the supply is not as much, and demand is picking up. How is the commercial real estate market right now? Which is the pocket that's doing the best, and what are the big trends that you're noticing?
Yeah. It's been interesting because like, all this narrative with job cuts and AI and things like that, India historically used to do about 40 to let's say 50 million square foot of fresh leasing year over year, right? Gross leasing, what we call it. Last year went up all the way to 70-ish million, which was 77 million or something like that, which was peak. This first half of FY20 of this calendar year 25 has been something like 48 million, which means we're like on track to cross 80, and maybe get closer to 90. That is, insane trajectory. I mean, I don't think globally anywhere in the world type office leasing is happening at this scale. So it's all that 77 million that happened last year. I think only 2 million or 2 or 3 million happened in tier 2 cities. All the rest was happening within these top 8 cities, metro cities itself. So there's still some time for that story to, really play out. It will eventually as infra and all these things happen. So Bangalore, Hyderabad are big growth drivers. Gurgaon continues to be that NCR belt continues to be a big driver.
Despite all the
yeah,
pollution and everything.
despite everything. And Chennai has become a massive new entrant in this market.
Hey. Chennai was
Yeah.
like dead for the
Yeah.
longest time, right?
So I think what's happening there is that as manufacturing has started to kick in, and this China plus one sort of plays out, and Chennai is a big part, especially for let's say automotive and electronics and things like that. The service offices for a lot of those units, is something that I think is driving a big part of the demand. So the GCC part of, let's say, a Kia Motors or something like that,
Okay.
getting set up over there.
So
Yeah.
commercial is picking up in Chennai. Interesting. So Jeffries has come out with this really aggressive report, positive report on the company saying that there's a 25% revenue growth, 22% EBITDA growth over the next couple of years that they are projecting.
Yeah.
Are these reasonable estimates, or do you think that it would be hard to meet that?
Yeah. Flipped EBITDA at 25 and
Okay,
revenue
EBITDA
at
25.
22.
Okay.
I think it's 100% possible, and I think what we will always put out is slightly more conservative than what we think we can get to. But just talking about this entire kind of macro story that we went through just now, I think that is very reasonable in the sense that we're still so early, you still have so much room to grow. So yeah, I think it's possible, and the business hasn't even evolved to really what it will be. I think we're at the first stage of what this platform and what this business even is going to be. So there'll be new avenues to create revenue streams and drive a lot of this growth also.
So just to wrap up this whole numbers bit, right? You're sitting on annual revenues of around 1,300 crores right now. Is that
First half, yeah.
Yeah, in the first. Oh, that's the first half annual revenues.
It'll be maybe about 11, closer to 1,200 for the first half.
Okay.
Yeah.
Of
FY26.
6. Okay, so first half FY26, about 1,200 crores of revenues. So on an annual basis, about suppose 2,500 crores is what you're looking at. How much do you think you can take that to over the next 5 years? I mean, you must be having some kind of 5-year game plan.
5 years.
You haven't thought that far.
It's taken us 8 years to get to this, and 2 years of that was COVID. So I would say at least double, at the very least within 5 years, if not more than that. And so, yeah, I think, 5 years, it's not hard to say that we can get to like maybe $1 billion in revenue, or just maybe shy of that. That dollar amount keeps changing. So let's say, 7,000 crores, somewhere in that range.
Okay, that's
Yeah.
so doubling of revenues over the next 5 years.
Yeah, I think that's possible.
Wow, that's huge actually. It's a good growth that you're looking at.
Yeah, I mean, so that's that roughly like that 20% ish growth, right? Like, I mean, 20, yeah.
And would you maintain your margins also, or would growth come at the cost of margins because of all the competition, etc., that we spoke about?
No, I think that the margin is something that we can definitely keep, and there is operating leverage sort of kicking in and has been kicking in the business. So a lot of our fixed costs are quite flat, while we keep expanding and type of growing the overall portfolio, and so there'll be some benefit of that as well. I think generally, overall rentals themselves are moving up quite fast because of this demand supply shortage. So there's some ability to move price, and constantly kind of keep moving price up also while giving some savings to the customer. And, we never want to be like the highest AUM or the most centers or anything like that. We've been very focused on saying that we want to differentiate purely from top line and bottom line, which is why we focused on this part of the segment, why we've been so particular around not going and playing in that 11, 10, 9,000 type of range. Bottom line growth is really what we are after, right? That's really what we measure, at least internally, and how we think about growing the business for sure.
Okay, interesting. So that's all about numbers. But coming back a little bit to your own story, right? It's very interesting to me how you, of course, had this big platform, which is the Embassy Group. You grew up seeing how that business has evolved with your father, etc. But you still chose to branch out and bring WeWork to India. How did that thought come about, and why did you do that? I mean, was it because you wanted, to chart your own path? Was it to do something different, or did you just stumble upon the idea?
So I think I think inherently, even while growing up and seeing, the business being built, I have always had a bit of an entrepreneurial bug, and that has shown itself in, very small parts of my teenage years, and, and just constantly trying to find ways to even, or getting a thrill of just making money in small ways, whether it used to, I we used to throw like these parties for our graduation and New Year's and just like charge people for it. Just make. I think the first one we did, I made like we put in $10,000 each, made like $40,000, and used all that 40,000 and drove to Goa the next day and kind of like just blew it up. So small things like that. I knew that this excited me a lot, and I wouldn't feel as good about what I was doing if I wasn't engaged in that type of a, environment. In my last year of college is actually when I set up my first business with a partner of mine. It's a hospitality business. We run a few restaurants in Bangalore, and we also have like a catering business. It continues to run. So it's been about 12 years since we did that. It was only after that I went and said that I want to join the family business. And yeah, so I spent 2 years setting that up, really understood or experienced how hard it was for startups to set up in India at that time. 2012, 2011, 2012. There was no infrastructure. We used to meet, people in rented apartments that some design studio who we wanted to build our logo. They just taken a huge rented apartment. They were using only one room in that. The rest of it was sort of like just empty or coffee day or whatever it is. That's where meetings and all of that used to happen. And then I went and joined the family business, saw that we were building these huge tech parks for Googles and IBMs of the world. And this was also about the time where, the startup ecosystem in Bangalore at least was starting to really bubble. Like Flipkart had just got valued at like 16 billion. There was this Ola, all of this stuff was kind of happening. So you could feel there was a startup momentum, making, the Startup India initiative by the Prime Minister, all of that kind of happened in that
At the same
in
time.
that time period. And so the idea was to try to really, I think I wanted to always try to do something different, and try to have like something that I could put my mark on. And I think any young generation coming into the business, I think most of them feel like that. And that led us down this path of going to New York, entering a WeWork. And once we entered, it was like basically a light bulb, life changing moment, because I think the same thing you were describing, right, in terms of aesthetic and vibe, and that different feeling you get when you like compared to what traditional offices used to look like at that time. It was very clear to me and to all of us, my dad included, that if this was in India, this would just explode.
Blew up,
It
yeah.
would blow up, and that's exactly what happened. So we ended up creating what was the first ever franchise location for WeWork in the world. When we met Adam, that time, he was big in the US, big in New York, hadn't started global expansion yet. They were one center in London, one center in Amsterdam, something like that. They were thinking about going global, but Europe and China were where they wanted to grow. They weren't looking at India. They were like too low priced, now we won't make money. All of that was sort of like what they thought. So we said, look, we'll put our money, we'll take the brand, we'll grow it, for you. And when you're ready, you can come and take over, or be a part of it. That was the original understanding that we had when we started WeWork.
How ironic how the tables have turned.
Yeah, everything changed very, very quickly. So yeah, I think it was my entrepreneurial spirit, the like the freedom and the ability that I got to be able to finally do that, because I don't think we would have ever obviously got this WeWork brand and franchise if it wasn't for what Embassy and like what the foundation had built already. And I'm doing this. Everything still is sort of like under the entire family umbrella, but have had this opportunity and autonomy to kind of grow it.
So when you talk about autonomy, freedom, was it a lot? Did a lot of it come from your upbringing because you had that entrepreneurial family backing?
Yeah.
Was a lot of it passed on to you? I'm just trying to understand what differentiates people who take outsized risks
Yeah.
compared to people who don't.
I think so. I mean, I think it's you just absorb so much when you're like growing up of what's around you, right? So when you grow up, I think in a business family, and dinner conversations and all of that are really about the business. It's there's no like work life. It's like all of it is life. Company events or going and spending time with just people who are working within the organization. I think the mix between that company and what your life is so interconnected that you don't really think of it as
Separate
two
entities.
separate things that maybe most people or anyone in a professional setting does, and that has some impact on how you are as a person, how you wish to act and wish to operate. So there's that. There's a financial part to it also. You want to, one thing for me was that used to drive me or still drives me is that I never wanted to feel like I was handed all of this, and I think that was something that was very, like, it is very part of my core as a person. So
Tell me more. Why didn't you want? Because I mean, it's handed to you. You don't have to really work for it as
yeah.
such. Isn't that a good feeling?
No, it's not.
Why
It's
not?
actually like, I don't know. It might be different for different people, and there are, people who are more than happy to have that. It just wasn't something that would feel good about myself, I feel. If I didn't feel like either I earned it or did enough to kind of add to it also, right? So that is something
You
that
felt you
is,
didn't deserve it.
yeah, I mean, I think there's always like this imposter syndrome, or, like, what did I do to,
Be here
yeah,
and
be here type of thing. And this was like when I was very, very young. But I think that's a big part of what drives me even now. You want to, just continue to add to it. I don't want to just sort of like
keep taking from it.
keep
Yeah.
taking and just sit on my ass basically. And
Fair enough. Yeah.
yeah, I think that's definitely one part. And you do have to, have this entrepreneurial thing. I mean, I don't think everyone has it. Even,
But you could have added to it by being in the system as well, in the embassy
yeah,
group itself, right?
yeah,
You chose to take a different path, which is, of course, like an ancillary path, but it's still different.
yeah.
Was that just so that you could get a sense of freedom of what you are building and autonomy, as you said? Or because I see a lot of people do that. Like,
Yeah.
I recently interacted with someone from, the Jindal group, the JSW group, Part
Yeah.
Jindal, who
Yeah.
also did the same thing. Like, he didn't stick with the traditional businesses. He decided to branch out into paints and
Yeah.
cement and all of that. So I'm just an example of why did you think about taking that path?
Yeah, I think at that time. So, firstly, I was like 24 when, we started on this WeWork thing. So, I don't even think I was thinking that much about anything. It was just like an exciting
came your way.
opportunity. I didn't think that like 10 years later I'll be like trying to take it public. None of that was really what I was thinking at that time. And also my dad, he's quite young, and he was very, very like operationally part of the business. So I think there would have always been some ceiling into exposure into making mistakes, and kind of also adding my own DNA, my own flavor to that. I think that is something that I truly value now, right? And even if I think about, at least for the foreseeable future, I would want to always have that autonomy. And I think that freedom and, being able to build the organization, build a company in my way, it's very rewarding. And I don't think I knew it then, but looking back at it now, I think that's one big reason that I would always want to, kind of branch out a little bit and do that.
Wow. And do you have plans to do something different, or do you plan to just continue with WeWork India? I mean, any more thoughts? Because, like you said, right, the startup ecosystem has now matured.
Yeah.
10 years ago, everyone was like trying to find white spaces, and there were many.
Yeah.
Now it's kind of like a lot of the white spaces have been filled,
Yeah.
but there's still so much in terms of opportunity. So, do you think you're gonna be a different kind of entrepreneur 5 years from now? 10 years from
100%.
now?
I mean, I think I'm very focused right now, and want to definitely take WeWork to a certain scale, which is very far from where we are right now. But I do see myself, at some point doing or trying to do something outside of this also, something new. And I don't really think that the white spaces are filled. There are, yeah, I mean, if you even just compare to the world, let's say China as an example, the kind of innovation happening there, or in the US, I think we're still a bit behind when it comes to what type of businesses, are really built in India as of right now. We were on this path of like borrowing ideas. WeWork itself is like a thing of that. You just took an idea from, some other part of the world,
And
applied
brought it to
it.
India, yeah.
Now you're starting to see nuance, like quick commerce as an example, while it came from food delivery and, that entire wave that came, it's very unique to
India.
India.
Yeah.
And I think over and above beyond that, there are opportunities across, I don't know, so many things like technology. I think AI, energy. Um, I think there's just so many parts of like the country that still need to be built, and you'll need people to take risks, and we need risk capital. You need entrepreneurs. You really need entrepreneurship at mass scale. If we need to really get out of or get to China levels, in my
Yeah, yeah.
opinion.
True. No. There's
Yeah.
a lot that needs to be done, especially in
Yeah.
terms of, just easing government regulations also, making it
Yeah.
easier for people to build businesses, which is, I think, the whole Inspector Raj that people talk about,
Yeah.
right? That needs to be worked on. So if someone young between the age of 20 and 30 wants to start a business, right? Wants to put some money to work and start something new, where do you see the white spaces now in terms of, I mean, you spoke about the broad areas, energy, technology, etc.,
Yeah.
but particularly anything that stands out for you?
Um, I think, I mean, there's just so much. We're quite ingenious in the way of trying to do things, or being able to do things at lower cost. And really, we tend to think that, oh, because India has 1 billion people, that's my universe. But if I can actually do things that cheap, to me, 8 billion people is the universe. So I would say that whether it's technology, whether it's things like space tech and all of that, where we are really moving forward in doing things a lot cheaper than the rest of the world. I think that's a very unique space. Robotics to me is something that is so nascent. If you combine AI and robotics over a period of time, um, there is so much opportunity there. I mean, our real estate industry itself is the lowest adopter of technology. No one uses any technology within real estate. So,
In fact, I was going to ask you, within real estate,
yeah.
since you have both, you have that vantage point of both the Embassy Group and WeWork India. Within real estate, what kind of opportunities do you see?
I think that there are opportunities around. I think there are opportunities around building tool or systems, SaaS basically for real estate today, much more AI, AI first. Companies in today in real estate still use old systems like SAP, and where it's very clunky type of systems which don't necessarily fit how dynamic real estate is. They're built for completely separate types of businesses. So I think there's an opportunity to overhaul that entire piece, give operators, developers access to data that's smarter, insights, sales systems, CRMs, all of those things can be really looked at, overhauled, and no one is really, doing that for whatever reason. I think there's construction technology also has a long way to evolve in India. We're still very labor heavy, and that has an implication on quality and everything, that delivery timelines and all of that. So automation there, being able to bring some better systems into construction will allow the entire country to actually maybe grow a lot faster and infra to get spent a lot faster. And then I think the last bit to me is energy, right? And this is something that I've been, sort of looking at a lot more. Um, can you today real estate is really like one third or 40% consumers of all energy, like your buildings and everything that happens within it, HVAC, blah blah blah. There's a huge opportunity to make those self-sustaining type of assets. Can I make a building not reliant on the grid and actually just reliant on itself to both generate, operate, and all of that? So I think there's something within the energy space also that
Wow, that's a
we're
lot actually. That's a lot of food for thought, really.
yeah.
To think about. And one wonders, right? I mean, if the progress in China in a space like real estate, for example, is so rapid,
Yeah.
what stops India from getting there? I mean,
Yeah, risk capital to me is one big piece. I mean, today in America, you can raise a seed check at, I think now recently, like you've heard seed checks of some AI businesses, at billions of dollars, but even few 100 million or even 50, 60 million, 100 million, that's not that common in India. Like VCs are not as willing to take big bets on entrepreneurs' ideas yet. I mean, we've not seen it, and it's still all very. It's US funds and global funds. It's not like Indian capital, people who have made money in India trying to really bet big on Indian
why
entrepreneurs.
do you think that is?
I think we're just generally more conservative.
Risk
Yeah,
averse.
we're more risk averse. We're much more conservative, and it's some mentality shift that needs to change. Where need to be more long term, have a much more long term view, in my opinion.
It was a very interesting conversation, Karan. Thank you so much
Yeah.
for stopping by and speaking to us. All the best with your business. And this show is called The Money Mindset. So we always ask people what money means to them.
Yes.
And same question to you. What does money mean to you?
Money to me is it's freedom. It means that, when you have it, not only are you able to just do what you want, but you can also help a lot of people along the way. So I think it's freedom. Like that would be the ultimate. I think that's everyone's kind of ultimate chase, right? Is to just be able to do what they want and not have to answer to anyone.
Yeah.
Yeah.
Okay. Well, on that note, thank you so much for coming down to Bombay and doing this with
Yeah.
us, and all the best.
No, thank you so much. It was a lot of fun.